Hello and welcome everyone to Silver Asset of the Day for the 28th of January 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, did you catch the move this week that we talked you through on Tuesday's Gold Asset of the Day and the week ahead commodity report, which was that slingshot move higher for metals at the beginning of the week in the lead up to the FOMC statement, and that subsequent rug pull that we would get after the FOMC statement with pressure to the downside at the end of the week, and then watch out for next week going into the China public holidays. All of that has played out. Here is just a quick clip where we actually talked you through this play by play, how this week would essentially pan out. What you need to be aware of at the moment is it's very typical for the metals, especially gold, to rally in the lead up to an FOMC statement. However, often afterwards, pull back later on in the week. The challenge that you've got at the moment is that going into next week, you've also got China on their 1 week public holiday. During thinner liquidity, there's going to be less support for the markets during the Asia Pacific session. So essentially that can give you an opportunity to buy into any dips that we may get as we go into next week, as China celebrates their new year, and as we're going to get less liquidity and essentially exaggerated moves in the market. Often that can be a good opportunity to buy into dips on the metals. So just following on from that, let's quickly summarize what has happened over the course of this week. So on Thursday, gold prices essentially, they tanked over 600 points to the downside the day after the FOMC statement. However, at the beginning of the week, gold, silver, platinum prices, they broke out to 2-month highs. We've taken advantage of this with all of our clients at the Gold and Silver Club. I'll talk you through it. This week, we banked 5 positions on platinum for over 5,000 points profit. On the energies, we banked over 3,000 points profit on 3 trades. We also banked 555 points on gold, and we banked 224 points on the US dollar index. That's over 8,500 points profit with our clients at the Gold and Silver Club. Many of our clients now delivering over 6 and 7 figure returns in the last month. We've had multiple testimonials just coming through from our clients, just celebrating their success and achievements over the last month. It has been an absolutely huge month, to the point where we've now banked over 20,000 points profit with our clients at the Gold and Silver Club over this month. Everything is completely documented. These are results we've been getting with our clients at the Gold and Silver Club. So just to put it into perspective, for this week only, banking 8,500 points profit for every 1 lot contract that you'll be trading, that's $85,000 of profit. For every 10 lot contract that you'll be trading, that's $850,000 of profit. So with these moves that we're seeing at the moment, there are 2 ways to trade it. One, of course, is take advantage of the day-to-day volatility that we are seeing. There are massive opportunities to capitalize on the daily and the weekly cycles. Alongside that, you've got the super cycle that we're moving into with commodities, where you have palladium prices this month up over 25%. Energy prices this month, they're up over 15%. You've got lithium prices in the last 12 months, they are up over 400%, like a cryptocurrency. And in fact, on that point, cryptocurrencies have had their worst start to a year since inception. Bitcoin is down over 50% from the November highs. We've also seen the stock markets have a terrible start to the year, selling off by over 10% in the month of January, whereas we've seen capital shift into commodities, which is now the hottest asset class of 2022. You definitely do not want to miss out. So with that said, what else do we need to look at now as we go into next week? Next Friday, we have non-farm payroll data, which, as you know, that can create lots of volatility in the market. Next Thursday, we have the European Central Bank announcement and the Bank of England. Both of these can be huge movers, especially for the metals. Next Wednesday, we have the OPEC meeting. That will affect oil prices massively. Tuesday is the 1st of February, so into a new month, you get fresh capital coming in to the market. So of course, there is a very specific way to capitalize on that from a trading point of view. And then at the start of the week, next week, you have China on their 1 week public holiday, which means essentially during the Asia Pacific session from the Sunday open onwards, there will be less liquidity in the market. During thinner liquidity, this can cause exaggerated moves in the market for you to capitalize. So as you can see, there's going to be back-to-back opportunities as we go into next week, where we can now swoop in much lower to benefit from these lower prices in the days ahead to capitalize on very specific cycles as we go into February. And of course, this is where you want to be utilizing a research-driven approach to the market. Ditch technical analysis. As you know, it does not work. You need to be utilizing data, market intelligence, statistics. Make sure that you're learning and aware of the daily, the weekly, the monthly, the quarterly cycles for each commodity. Be aware of capital flows in the market, key areas of liquidity, learn the intermarket correlations, the ratios in the market, alongside that, the fundamentals, macroeconomics, and of course, how the hedge funds, money managers, banks, and institutions are positioned in the market in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make an application to join our professional mentorship program.